because I just finished my segment on CoinDesk TV. I was on First Mover, and I love that show so much. Shout out to the hosts, Jen and Lawrence. They're always fantastic. I've been on the show before doing various hot takes, but they invited me on to actually talk about digital money demystified. But of course, I always welcome the opportunity to talk about the news of the day before we jumped into that. So we talked about the SEC's recent talks with Grayscale Investments. It's been reported certainly by CoinDesk, but also just across all platforms regarding the conversion of the GBTC trust to a spot Bitcoin ETF. So that's really, really important. There's also the potential for an Ethereum spot ETF. This is definitely a watershed moment for the crypto industry. So if you have wondered why all of a sudden there's this really exciting uptick in pricing for Bitcoin, for Ethereum, not as much for some of the altcoins, but I think it has something to do with consumer and investor confidence in the wake of these announcements and the impending Bitcoin spot ETF. There have been futures ETFs out there. The SEC, under the leadership of Commissioner Gensler, has pushed back for quite some time, pushing back and not approving spot ETFs for Bitcoin. And it never really made sense to approve a futures ETF based upon the underlying asset that was not also available as an exchange traded fund. So with the anticipated approval of the spot ETFs, that really could lead to a bullish sentiment. Again, we're already seeing it. Bitcoin in the last 3 weeks, 3 to 6 weeks, has been up over 30%. It's up almost 70% on the year. Really exciting times. It was above 37,000. It has really held strong with the resistance originally at 35,000. And the ETH is doing even better. So we often talk about the OG Bitcoin that was first launched in January of 2009, but Ethereum is a major, major native coin that supports the Ethereum virtual machine and the ecosystem. So many tokens are in the Ethereum realm, rely on the strength of Ethereum. And so that's really, really exciting to see. All this is happening in the context of the post-crypto contagion of 2022. We are cleaning it up. Goodbye, Sam Bankman-Fried. Goodbye, everybody else who was under the auspices of crypto, using the same old fraud tactics. We can now say not just alleged fraud, but actual fraud now that SBF, for example, is a convicted felon. So stay tuned for that. But we are bringing that to a very real close for the rest of us, and he can go on and spend the rest of his life, hopefully, in jail. We're also on the heels of Bitcoin's next halving event, where the availability of Bitcoin decreases. At the same time, you have more people moving into the space. And so that's supply and demand 101. You have more people who want to buy than those of us with diamond hands that are not willing to sell. And that also makes for an exciting time. So spot ETFs on the horizon for Bitcoin, I believe, and many experts have talked about it, probably as soon as year's end, maybe by the end of November. Maybe Gensler and the commission want to just wrap this all up. There was some conversation and speculation on CoinDesk this morning about whether it would be whether one or a few would be approved. There have been some pending applications for a long time. Or maybe the SEC doesn't want to be, a sovereign maker, not wanting to say this one first and then this one and then this one. So maybe there'll be a bunch coming through at the same time. I think that's the more likely scenario. And then 2024, maybe as late as 2025, we will see an Ethereum ETF. There's been some talk and some coverage around BlackRock, traditionally very conservative, but also getting ready to get ready. Let's just say it like that. And that is a major, major player in the investment space, obviously. So to have an Ethereum ETF application maybe somewhere in 2024 will be a really strong signal that um, regulatory certainty is going to come into the space, greater protections for investors and consumers, support for the innovation that underlies crypto assets. So it's a really exciting time to be sure. And you really want to pay attention to this. That's why I'm so grateful that my book is coming out at the same time, because with all of this new activity, with the uptick in the price, with the likely FOMO, the fear of missing out that people will start to experience as the price continues to pump, mixed with the fear, uncertainty, and doubt, also known as FUD, that would, reduce the entirety of an emerging asset class into one headline or some type of clickbait. And so, hey, Anthony, hey, Kelly, welcome King Donald in the place, Air Assistant, shout out to you as well. Here on IG, and I'm also live on YouTube. So hello to those folks who are watching me there as well. Hello to YouTube. All right, so let me get into a little bit more of the top news, and then I want to share some wisdom and some reflections for professionals, for financial advisors, for lawyers who now have to quickly get up to speed in order to meet the coming demand from clients, from the workforce, from your C-suite, to figure out what is going on and how you can avoid both irrelevance but also malpractice. So let's get into it. All right, so a deeper dive into the CoinDesk news today. Securities and Exchange Commission has opened talks with Grayscale Investments on the details of the company's application to convert its trust product that you probably have heard about on commercials, etc., GBTC, which is so converting GBTC into a spot Bitcoin exchange traded fund, also known as an ETF. And in the spirit of disclosure, I am a newly appointed member of the Digital Currency Group Board. DCG owns Grayscale, and nothing that I say is any reflection on my relationship to DCG. Now, the SEC approval of one or more ETF applications is highly anticipated within the sector. And this is a moment that is really a milestone. It's a long time coming. This could really ease the everyday investor's path into digital assets without having to hold their own wallet. Now, at Advantage Evans Academy and in Digital Money Demystified, I talk about the importance of self-custody, but everybody's not ready for self-custody. Everybody's not ready in terms of a mindset shift to really understand the intricacies of setting up a wallet, managing it, managing your own funds, etc. I believe that is where you need to be. But if that is the thing that is keeping you from participating in the upside opportunities for this emerging asset class, while de-risking the space, then the ETFs are going to be a great option for you, as long as your investment portfolio is open to exchange traded funds in the crypto space, most notably Bitcoin. And then again, in the next 12 to 18 months, I suspect we'll see an Ethereum ETF as well. The reason we're talking now about an Ethereum spot ETF is because BlackRock registered iShares, the iShares Ethereum Trust, as a Delaware statutory trust this week. Yesterday, Thursday was the 9th. So you heard it here, maybe first or maybe second, that on November 9th, BlackRock registered iShares Ethereum Trust. And so that is a signal, it seems, that it is getting ready to get ready to formally pursue what seems to be an informal pursuit. And let me tell you something about BlackRock. They do not waste time on things that aren't going to work out. And I think that's also why experts are so optimistic about the possibility of a BlackRock Ethereum spot ETF. So pay attention to that. Pay attention to the fact that the response by the market is really, really strong. So we have the price of Ethereum was last up about 9%, 9.1 or 9.2% at around $2,062.80. That's its highest level since April. We have Bitcoin, the largest cryptocurrency by market cap, having the longest history back to 2009, was up 2.5% at 36,005. It again got above 37,000 in the last week or so, which was really, really exciting to see. Continues to hover around the 18-month high, and Bitcoin is up almost 70% on the year. So for all those people who said Bitcoin's dead, Bitcoin's a scam, here today, gone tomorrow, just a fad, only for criminals, you need to check yourself. And by yourself, I mean your portfolio, before you wreck yourself. This is not legal or financial advice. But the point is, in one of the most persistent and pervasive myths, is that all of crypto is just a scam. First of all, there are over 35,000, maybe 40,000 different coins and tokens and counting. Most of them are shit coins. That's fine. Most penny stocks are shit penny stocks. Excuse me, mom, if you happen to be watching. But that is true. But you have some cryptocurrencies. There's so many different types. Some operate better as a store of value, like Bitcoin presently, although the original point from the Satoshi Nakamoto white paper that describes the point of peer-to-peer cash through Bitcoin, I personally think it functions better as a store of value, but you have others that operate as a unit of account, a medium of exchange, etc. You have stable coins, you have central bank digital currencies, you have meme coins, you have it's just so many. So you really want to spend some time getting to know the space. Learn before you earn, learn while you earn, all of those things. We're playing the long game. It's not a short game experience, but the future is now. Let me know if you have questions, drop them in the comments for sure. Keep an eye on that on IG in particular. Now, beyond market dynamics, this evolution of a new opportunity to invest in the space really does underscore the crucial need for professionals in finance and law to adapt, to prepare, to pivot for the new landscape of digital assets. The crypto world is complex. The introduction of these ETFs will bring a new layer of intricacy that requires specialized knowledge and skills. And a lot of lawyers, I'm a lawyer myself, I'm a full tenured professor at Penn State Dickinson Law School. I have a co-hire appointment at the Penn State Institute for Computational and Data Sciences. I own my own onboarding and advisory company, the Advantage Evans Academy. You can find out more about that at advantageevans.com. And we've got to get this right. We have got to figure this out. And the first way to do that is to focus on the myths, to bust those myths, or at least to right size them, because so often myths have a kernel of truth. For example, one of the myths that I deal with is about volatility. Now, it is not a myth that the crypto ecosystem is volatile, but it is a myth that all volatility is bad. And so it was really important for me through research to go through and highlight things like the myth that crypto is too volatile, that it's only for criminals, that it's one big scam, bad for the environment, anonymous and untraceable, that it isn't secure, unregulated, completely unregulated. I hear that all the time. It just is not true. Um, that it's just a passing fad, a bubble waiting to burst, and that it's only for a certain segment of the population. There is I would consider it to be a pejorative term, but is certainly something that is used, this idea of the crypto bro. It's the archetype of a heterosexual white male from the tech and or finance industry, maybe tight skinny jeans, a crypto t-shirt, jacket, driving a Lamborghini, et cetera, et cetera. Like there's this trope out there. There was some kernel of truth about that because of so many conferences where that's all you would see, particularly in the last bull run, and people, you know, just enjoying their Bitcoin millionaire status and telling everybody else to stay broke, etc. That could be quite toxic and not as inviting for um, those who are people of color, women. This still persists. I saw something on LinkedIn earlier before I hopped on to live that showed it was over 80 some different speakers. And of those 80 or 90, I think even there were 5 women, and at least one of them was a moderator. And the picture, the promotional image that they were using was of all men. It just makes it far less likely that women, people of color, will participate, not because anyone said stay out, but by the actions and activities don't make it a welcoming space. Now, I have been to hundreds of crypto meetups by this point, dozens and dozens and dozens of, more than dozens at this point, probably hundreds of conferences, seminars, webinars. I've led my own. You can find out more about those at digitalmoneydemystified.com and also advantageevans.com. But we have to deal with the realities of new entrants coming into the space that don't have a tech background, don't have a finance background, but really want to and need to get up to speed on the future of wealth and of work. So, um, I want to talk a bit about how legal and financial professionals must prepare, be prepared, not scared. That's my approach. I had to pivot what I do as an educator, as a lawyer, to be sure, and I want to help professionals get ready. In fact, I'm hosting a half day webinar for professionals specifically called Elevate Your Expertise. And my hope and my intention is to empower professionals to get ready, how to avoid irrelevance, how to avoid ethical concerns and considerations and violations, how to avoid malpractice. So, how do you do that? And I'm going to highlight some of the things we're going to talk about. And you should go to digitalmoneydemystified.com to sign up for this webinar. Invite your colleagues as well, because it's a really important moment to focus on certain things. One, obviously, understanding the cryptocurrency basics. Professionals should have a solid grasp of the fundamentals of cryptocurrencies, including how they operate, the underlying blockchain technology, and the various types of digital assets. And that isn't just Bitcoin and Ethereum, the altcoins. That's important, but also the fact that these cryptographically secured assets are programmable. So what does that mean? How can the character change? What's the taxonomy of cryptographically secured assets? How are fungible tokens different than non-fungible tokens? Which ones will be available as an exchange traded fund, etc. Critically important. Bare minimum to avoid irrelevance and malpractice, right? Number two, regulatory compliance. So, staying ahead on the changing regulatory landscape is critically important, and something new happens every single day. So, understanding the role that the SEC plays, the CFTC, what are the guidelines coming out of Treasury? All of those things have to, you have to have a clear understanding and a grip of understanding anti-money laundering and know your customer regulations and how they apply in the crypto space. So staying updated on the changing regulatory landscape is key. That landscape that governs digital assets today and how that will evolve over time. And critically important, SEC guidelines, IRS tax treatment, best practices for tax compliance. as well, which is somewhat different in the crypto space. We have, you know, first in, first out, last in, first out, but those don't seem to be the best for cryptocurrencies year end. We're starting to think more about high in, first out when given the volatility. So CPAs, you got to get up to speed on this as well. Also understanding smart contracts and decentralized finance or DeFi. So having a thorough understanding of what a smart contract is, how it functions, the role of smart contracts and automation, automatic money makers, market makers in the DeFi space, lenders. We had a lot of problems with lenders in 2022. What the legal implications are going to be essential for financial and legal professionals. And this includes knowledge of how smart contracts operate and how they are legally enforceable. What's the legal enforceability of these contracts as well? To my lawyers, when we talk about smart contracts, we are not talking about offer, acceptance, and consideration that we learn in law school, but it's critically important to understand the automation of if then sequences and performance. A huge issue for financial professionals and legal professionals who will be representing folks getting into or building companies in the crypto space, security and custody issues. So knowledge about best practices for the secure storage and custody of digital assets is vital, especially in light of the unique security challenges posed by cryptocurrencies. We have all sorts of different types of wallets. You have hot wallets, warm wallets, cold storage wallets. You have multi-sig accounts for additional safety. I just interviewed someone named Om Shah on the Tech Intersect podcast. It's a weekly show. You should definitely find that wherever you get your podcasts or listen to your podcasts, and definitely subscribe. Om's episode will come up very soon. He has developed a secure overlay for wallets that functions essentially like antivirus for wallets. It's going to be a critical component for an additional layer of security. Security and custody issues are paramount as well. And so legal and financial professionals, you're going to have to get up to speed with this. The evolving legal frameworks, keeping abreast of those frameworks, not even just from a local, state, and national level here in the States, but around the world. This is global technology, global financial technology is critically important to focus there. So every professional, legal, financial needs to get very, very clear and present, or work with consultants like me to help you with the evolving legal frameworks. Initial coin offerings and tokenization knowledge. So understanding the legal aspects of ICOs, initial coin offerings, security token offerings, the process of the tokenization of physical assets, or not even necessarily just physical assets, but traditional legacy assets, and what that might look like in the future as well. So that's going to be critically important. A couple more things: ethical considerations. So familiarity with the ethical considerations that are unique and specific with respect to advising clients in the digital asset space. That makes me think of conflicts of interest, disclosure requirements, client confidentiality in the digital context, whether it's appropriate for an investment advisor or a lawyer to also have holdings. I personally think that that should be the case. I know the SEC is having difficulty hiring experts in crypto because one of the requirements is you have to sell all your crypto. Nobody's doing that. Not anybody I know. I know I'm not. And so that makes it practically more difficult to get experts in the field if they're not integrally familiar or intimately and integrally familiar with the digital asset space. You have to have some skin in the game to really understand how to custody, security, safety, and the like. Understanding blockchain technology applications. So at least an awareness, you don't have to be an expert, but at least an awareness of how blockchain technology is being applied beyond cryptocurrencies. I'm most interested, quite frankly, in how the underlying distributed technology and smart contracts and wallets will be used for identity, for supply chain, for the provenance of diamonds and wine and all sorts of precious um, metals and things of that nature. So that is critically important for the application of blockchain technology beyond just the financial realm can be extremely valuable. And then, of course, continued education. There's not one moment where you say, okay, I got it and I'm done. I literally study something every single day. I'm um, presenting or advising or writing, and every single day, reading reputable outlets, CoinDesk, Cointelegraph, Forbes Crypto, Reuters. Motley Fool has done some great coverage as well. There's so many places, legitimate websites and outlets where you can get great, important breaking news in the crypto space. I'm less inclined to rely on traditional media. I think they get it wrong most times. It's actually quite frustrating. And I want to start writing some op-eds. If you're in traditional legacy media, holler at me. I'd like to do some writing for you and to clear up some of the confusion, demystify some of the myths. Shout out to my new book, Digital Money Demystified. We've got to start getting this right because the FUD, the fear, uncertainty, and doubt, is leading people astray. And that is very dangerous. It's dangerous for consumers, for investors, and for those of us charged with the task of informing, leading, and advising. So we have to at least separate fact from fiction and all work from certain basic facts about the power, the pitfalls, the promise, and how to be safe as you engage, as you learn, as you earn, and to do so safely, legally, and confidently. So, three key takeaways here before I hop off. Again, drop any comments or questions you have in the chat. And definitely go to digitalmoneydemystified.com. You can learn how to get the book. It's available wherever books are sold. I also offer webinars for professionals and consulting. Let's get this right, y'all. Let's get these three key takeaways. One is increased accessibility and investor confidence. So, with the likely approval of a spot Bitcoin ETF, and also in the next 12 to 18 months, the approval of a spot Ethereum ETF. This that would significantly enhance the accessibility of cryptocurrencies to everyday investors. That bolsters investor confidence. That potentially leads to positive price response in the market. We are certainly seeing that, and so we got to stay on top of it. Number two, regulatory maturation. So the move to a spot ETF signifies that the industry, the ecosystem is maturing. It's maturing in the regulatory landscape of digital assets. It demonstrates a growing acknowledgement of cryptocurrencies as legitimate investment vehicles. I've been saying it for a long time. Listen to me now, hear me later. This paves the way for more institutional involvement, possibly more regulatory clarity in the future. So we have to stay connected. And then finally, professional preparedness. So with these developments, there's the urgent need for financial and legal professionals to be well versed in the nuances of digital assets. And in order to address this, I'm hosting a webinar. You can find out more information about it at digitalmoneydemystified.com. It's called Elevate Your Expertise. It's a specific, you can go to one session, two sessions, or all three. It's specifically tailored for financial and legal professionals. And in that webinar, I will provide strategic and key insights into the evolving world of digital money, ensuring that professionals like me, like you, are not just prepared, but literally ahead of the curve. In understanding and leveraging these changes. It's not a matter of if at this point, it's only a matter of when. Don't be surprised if you see a spot Bitcoin ETF by the end of November before everybody goes off to the holidays. And I don't think it will just be one, probably will be several. And then in the next 12 to 18 months, time will tell to see an Ethereum spot ETF as well. All right. So Thank you so much for joining me. Be sure to share this, like, show me some love, some hearts or whatever. Drop a 100 in the chat if I'm leaving you better than I found you. And look out for future opportunities for lives here on Instagram and also here on YouTube. Shout out to my YouTube peeps as well. All right, until next time, be good to yourself and others. Take care. Take care, YouTubers.